Hello everybody. So this video is entitled Time to Shine. Is it time to shine for these 5 stocks? As you know, I cover a lot of stocks on this channel. I like a lot of them. They're all growth, they're all innovative, they're all hyper growth. Aside from Tesla, I guess they're all of them either mid or small caps. And today I want to briefly cover some of them, beginning with the big news of the day, even though the market is crashing kind of right now. Again, kind of going back to this weird late 2025 market where we have, kind of liquidity being gone. I don't really know. It doesn't seem to be like a very good day in the market right now. But strategy this morning, at least when I made these slides, was doing pretty well for Stretch, and Stretch is really what matters for strategy at this point. Stretch actually opened up to 831, 832. The first 2 minutes of trading, it was at 100. I could see it, and so my guess is that Sailor ATM. This is a big deal. We've been waiting for this for many, many weeks. I think it was more than a month and a half we've been waiting for this. So this is a big deal. He forced it to get back to 100. It did today. It looked like we reached the 98 cents again, and now the market is crashing. So we'll see how many times we hit 100 today. Perhaps only once. If it's only once, I still take the win. I will still take the win. Note how Bitcoin kind of dropping, and IBIT, of course, the ETF dropping too. Strategies dropping more, actually down more than 3% right now. I am done trying to make sense of a short-term price action for MSTR. I don't know if I ever tried, but I'm entirely done. I think at 161, most people, tourists, most people who bought at 300 plus, 400 plus, they were either shaken out, they took the tax loss, they moved on, or they believe in the story at this point and they stay. If you have stayed through the pain of the fall 2025 for strategy stock, if you've stuck through the 2025 late 2025 pain, at this point I believe you're not a tourist anymore, and my guess is that a lot of the common shareholders believe in this company at this point. And so it's nonsensical. I guess the MNAV is compressing still a little bit today, but not that much. Moving on to another stock that I like very much. Actually, the stock taking down the market with it right now. Tesla down more than 4% as I speak. I don't understand. I honestly don't understand it. Tesla is another beat the denominator pick. It's part of my trifecta. Actually, if you go look at my New Year's video, my New Year's Day video, or a 50-minute video, I think this is like a 12 or 13 minute explanation, really, really quick, of my thesis for Tesla. Feel free to go watch that video again. All of the goodness, all of the good things happening to this company. Of course, market commentators trying to figure out why Tesla is dropping today. Apparently, Hyundai, or I don't know who, made a good demo at CES in Las Vegas. Apparently, I guess NVIDIA released their new version of their FSD, quote-unquote, platform. Or it could simply be down because of German sales numbers. But that's a joke, because this stock at this stage should not trade on the sales numbers for their cars in any market. And actually, I consider, in my full thesis for Tesla, I consider selling cars to be a side quest. To me, that's a side quest compared to the bigger story of a business. Selling cars is just their legacy business at this point. But let's it's not past the market to be this silly and to keep trading Tesla perhaps on car sales out of Germany, which is kind of ridiculous. December always a slow season anyways. So anyways, that's just what it is, especially in Europe with how cold it is right now. In December, who's buying a car? I don't know. Moving on to HIMS. HIMS is a similar story. I thought we'd get a break this year. Tesla, I thought we'd get a break. Okay, we keep dropping. HIMS, I thought we'd get a break. Okay, it continues. I got it. Mr. Market doesn't have any love for growth right now. It only has love for the benchmarks. It only has love for the QQQ. But nonetheless, HIMS still as cheap as I've seen it at a 0.10, drop it 3 to 4%, and we get a 0.09 on my EV over GP over RG. Rule of 40 is still very nice at a 60. And this is the disruption of sick care by the invention of healthcare. That's the thesis of HIMS. Most people still don't get the thesis. In my video that I made on New Year's Day, I go through my thesis on HIMS, and I have like 25 minutes worth of thesis on it. So if you haven't watched it, feel free to go watch it. HIMS is part of my trifecta. I'm covering all three of my trifecta today: strategy, Tesla, HIMS, and as usual, short term, the market kind of punishes them together, and they're being punished today. And moving on to another stock, two other stocks actually, well, especially one, right, is NBIS. NBIS fascinating. So it was up nicely, up to $98, and now as I talk, it's down 1%. So the volatility of a stock like NBIS is insane. But if I look at NBIS, nothing has changed for NBIS. In fact, NBIS is still predicted to grow at anywhere between 1,500 and 2,000%. So they're gonna 15x the revenue essentially, and you can see. I don't know why it was way up in the morning. I think some analysts said it could double. No kidding. Yeah. Your company is 15x the revenue. You think it's gonna double if they 15x the revenue? I mean, they're already twice as cheap as HIMS. NBIS is already twice as cheap as HIMS. So yeah, if you 15x the revenue, you're probably gonna double. No kidding, right? But I think the market was more excited about Rubin. Rubin, of course, being the next platform of NVIDIA, and NBIS is getting dibs on it. NBIS is gonna be one of the first ones to introduce that platform in 2026, and we know this because NBIS, of course, has a partnership with NVIDIA. They have a deep partnership, right? There's cross-stock purchases. There's money invested from NVIDIA into NBIS. So it's a little bit different than simply being on the suppliers list, right? There's a heavy partnership. Remember the leadership of NBIS. Founder of Yandex, right? The Russian Google is the founder of NBIS. In that circle, they all know each other. And that stock, to me, $98 this morning, that was the good reaction, the initial reaction. We may break back below 90. The market doesn't know. The market doesn't know how to value the stock. And I'll conclude with an outlier in my picks today. So my picks today are characterized by the market having noticed these stocks, but not knowing how to value them. The market's noticed Tesla, noticed HIMS, noticed strategy, noticed NBIS, just doesn't know how to value them, and it's being manic depressive. REAX is one of these, old BTD type stock. The stock that I used to cover on the channel, that I still cover on the channel, but the problem is if I do a video only on REAX, I'm going to get 400 views, right? That's kind of a problem at this point. So that's why I cover more popular stocks now. But if you follow, if you remember my early coverage of HIMS, nobody was covering HIMS. You may remember that. Like I cover a lot of small cap. REAX is my real estate play. REAX is my preferred play for real estate. I know a lot of people are very happy about Open Door, and there's a lot of hype around Open Door, but Open Door's model, like I said, I mean, I like it a lot, but it's capital intensive, it's capital heavy, and it's closer to a flipping model, and I think it's a little too aggressive to try to entirely get rid of a realtor. REAX is simply trying to acquire the top 10% of realtors in each market, move them to the REAX platform via a very, very, very compelling commission structure, and that's how they've been able to steal the best real estate agents from mom-and-pop brokers around the US. And what I like about REAX the most is that they have grown 50%. They're predicted to grow 50% next 12 months. But historically, they've grown 50% year after year for like the past 5 years or something like that. This company is already profitable. It achieves a rule of 40 out of 53. EBITDA margin is low, gross margin is low, but of course the revenue for a company like this is extremely high because you're talking about real estate. So this is always a company, real estate companies are always going to trade at under 1x revenue, right? 0.27 revenue. That's because of the low margins of real estate. It's understandable, right? But even with those numbers, you're looking at a dirt cheap stock. Enterprise value over forward gross profit is a 3x. And again, REAX, HIMS, and NBIS, they are kind of my quote-unquote cheap, easy to calculate darlings right now. I really believe Tesla and strategy are heavily undervalued right now. But you're looking at businesses that are so innovative that they don't fit in a classic price to sales, price to gross profit framework. They just don't. These stocks, whether it is Real Brokerage, NBIS, or HIMS, they fit into a classical analysis spreadsheets. The numbers looks oh so cheap, oh so dirt cheap. So these are the 5 stocks that I think it's time to shine. I think it's time to shine for them. I'm looking forward to the continuation of 2026. So anyways, this was not investment advice. This is not financial advice ever on this channel. No financial advice. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching and have a wonderful, wonderful day.